Welcome, everybody. It's Sang Lucci Mailbag. You're here with Lucci and Mr. Peter Zhang. Not unusual occurrence here. So we're going to go ahead and take some questions here. Today was my first day of trading. I lost $200, which is good, actually. which is really good. So my first day back here, I'm just kind of dipping in. Pretty interesting market we've had recently. A lot of people are expecting a rug pull. I'm honestly considering it, but even at the time, like, you're still not seeing much of that selling pressure in anything, except for names like casinos and the price line. Most of the day I was talking about that on Twitter. But let's go ahead and get into some of these questions here. We got a good one here from Trading 2. Hi, can you give an interesting story or two about the time spent raising capital / meeting new potential clients for your hedge fund? I'll soon be doing the same thing and want to get an idea of what to expect. I mean, we got a lot of those, Pete. We got a lot of those, man.
Oh, God. Yeah, we got plenty of stories about raising money. Let's just say with Lucci's track record, everybody loves it.
Right.
But at the same time, everybody hates it. And, you know, it's like there's no love out there. You got to be a baller, and unfortunately, you know, with guys that are, money makes people emotional. You know, just the same way that it makes traders emotional, it makes everybody else emotional too. And investors are like noob traders. Put it that way.
Yeah. So that's good advice for this person that's asking the question here. So whoever's asking the question here on as far as raising money, you know, when you're trying to itemize or trying to figure out who your ideal client is, just remember, like, when it comes to money, when it comes to a hedge fund, the devil is in the details. You really gotta let them know a lot of things, as far as your risk, as far as what kind of strategy, and then you got to expect a lot of blowback. If things don't work, exactly how you plan them. You remember that line from Boiler Room? Don't pitch the B word.
Yeah.
Can we give them a story on, like, what we actually did? We actually went on a little tour. Pete, myself, and Charlie. We went around the country. What did we do? We did D.C. We did Cali.
We did Colorado.
What else did we do? We did Colorado. We did New York.
Yeah.
Did we do Florida? Why do I feel like we did Florida?
No, we didn't do Florida.
Right, so we went to all these cities, and you start with friends and family, you start with people that you know, and then you just kind of branch out from there. You'll always have good prospects, and then that'll kind of fall through the cracks. So it's a lot of numbers game. It's a big numbers game too, So even though your investor might seem interested or whatever, it might take a lot of courting to finally get that check. So don't expect a lot of things to go your way right out of the gate. Pete, any other advice you want to give this guy?
Yeah, I mean, it's just really, if you're on the hunt for money, you got to make sure you got that track record. You make sure that it's not a simulated track record. You make sure that it's actually live firing, live actual money on the line, things that you've done. It looks even better if you have your own money on the line. If you are fully invested, that's a really good part too. When you start making money, you not taking out investments also shows investors good things. But overall, I mean, it's just, honestly, you have to spend a lot of time figuring out who's the best investor for your type of trading.
Right.
And with all the different types of funds out there, and if you're going to smart investors, they spend maybe 30 to 50 seconds looking at your tear sheet, and then you're out. That's it.
Yep.
So
it's kind of like a resume. Kind of like a resume. You know what I mean? If there's nothing that pops out at them, that line from Wall Street One, like, Bud Fox, I look at 100 deals a day, I choose one.
Exactly.
So it's that kind of game. So be prepared for denial. All right. So that would be the best advice for that. So we have another question from Ho Nguyen, I believe. When you have an edge, do you take the trade every single time and just manage the results, or do you use some discretion? I trade equities. Also, I am a dude. Oh, he had to let me know that he was a dude. Dude, I don't know Vietnamese names like that. I'm assuming that's Vietnamese, right, Pete? Because Nguyen.
Nguyen, yeah, that's it, yeah. Mm-hmm.
That's Vietnamese. All right.
think it
Not
is.
that not that the Chinaman would even
It's
know
fucking
anything.
Chinese. What am I supposed to know? uh,
All right. So he's saying when you have an edge, do you take the trade every single time and just manage the results, or do you use some discretion? Yeah, absolutely. I mean, me personally, I always use discretion, and it's always like, if you see an edge and you like it a lot more, if the environment looks good. So for me, I'm a much more discretional trader. Like if you're trading equities, and let's say you have a program or something like that and you have an edge, like that's all you should be doing. You shouldn't be doing discretionary stuff unless you have a discretionary part of your portfolio.
yeah.
Pete, any recommendations on that one?
I mean, if you have an edge and you've already defined your edge, you should
Right.
be developing a system around what that edge is.
No doubt.
So, I mean, if you are trading for yourself, obviously use that and follow your rules. Discretion is kind of like, you have your edge, and your discretion is kind of like how good you are at trading kind of thing. If you can manage discretion and your emotions and to keep a winner better, and it's not in your program, that's all the better for you. But hopefully, your edge actually also defines your discretion. So you don't have to have discretion as an outlying type of like a variable. It's a part of your built-in edge type of thing. So.
Right, right. All right, so then we have our regulars here. We got Faisal. This is one of Nassim Taleb's. Is it Taleb? Taleb? I don't know.
Nassim Taleb, yeah.
Trading rules. Rule number one, do not venture into markets and products you do not understand. You will be a sitting duck. And he goes on to say, the more I try to understand options, the more they seem quite complicated and the more books it seems I need to read. There are so many strategies and many ways of going about it. I know that you like to keep it simple, but I'm finding it a bit hard with options. When do you think a beginner should feel that they understand the product enough to trade it and not be a sitting duck? How much study should one already have under his or her belt as a rough rule of thumb for options? I mean, dude, we come from the school of hard knocks, Pete, So this question, so for me and Peter here, or for a lot of other traders, like we learn by getting in there. You know what I mean? We learn by getting all up in that nonsense. So if it's taking losers, being a sitting duck for a while, like that's the best way to learn. Like if you're trading options and you still think there's education as far as like books and stuff that you got to read to understand something, I think you'll always be a sitting duck, in my opinion.
And also, it's all. I mean, like all the credit to Nassim Taleb. I follow him on Twitter. He's a great guy.
Definitely.
He's ass sometimes, but it's like if you don't venture to markets and products you don't understand, like how do you even make the first step? Like how are you even going to go to trade at all? Period. How are you even supposed to make that first step? And it's kind of like you have to follow your own type of risk-reward profile. It's like if you need 2 years of studying before you can put $1 on the line, freaking take your 2 years. But if you've got some money, you got some balls, and you're willing to give it a shot, put a little bit of money in at the time and try to figure it out.
Right.
But I mean, it's tough though. I mean, from a prop trader, Lucci, we all know,
Yep.
Prop trading's a trial and error. Systematic trading on the other hand is kind of like you have to understand the entire universe of your product and then therefore apply a ginormous strategy to it. And it's just a different school of thought,
Right.
It really depends on where you're coming from. But for retail, it's just like, what else can you do other than trial and error? Learn a little bit, try a little bit, learn a little bit, fail, try again.
I think Faisal, the root of the issue that you're having with that particular question is that you're looking for answers in in these books, and you're looking for answers to figure out through blog posts or through whatever you see online. You're looking for these answers to give you that confidence, but that's not what gives you that confidence. What gives you the confidence is doing it and coming out with something that actually works and that you can do over and over and over. Once you start getting into the mentality of going elsewhere for confidence, information, knowledge, and things like that, I understand a little bit of it is necessary, but then you're always going to have that mentality. Like if all of a sudden you go through a downswing, or you can't make some money, or maybe you just made a bad trade, all of a sudden you're scouring the internet looking for a new strategy. Like that's not what it's about. It's about finding what fits for you. If this shit is too complicated for you, like options and stuff, dump it. Dump it.
Yeah.
If you can't wrap your head around it, dump it, throw it out, and then go back to what you were doing. Don't feel like you have to understand anything. It has to work for your strategy. So, Faisal, I think you still need to do a little bit of soul searching as far as what particular strategy fits your mold.
Yeah, that soul searching is super important, man. Like, it's just honestly, like, if you are not in the mindful place of saying, I'm good at equities, I'm fine here, and I'm ready to make the move, you should just don't do it. Just don't do it.
Don't do it. Don't do it. Indeed. All right. So we got one more question here. I've been wondering how the large funds build up large positions in options. As surely if you buy a few hundred mil worth of options in something like HLF, spread across multiple strikes and expirations, he's asking, you will inevitably bid up the options considerably. And then he's asking, do you limit in and out on tight spread stocks like Apple or just go market? All right, so let's take the first question here. He's asking, how do large funds build up large positions in the option space? I mean, usually they call out to do these block trades. They look for the counterparty that's going to take the other side of the trade, and then they go ahead and broker that trade. I mean, that's usually how most large players put on these big positions. Pete, you got anything to add on that one?
I mean, that's totally right. They're not clicking at the screen when they're putting on these ginormous positions. They're calling and finding the other counterparty willing to put it on. And also, you got to think like. It's really tough to say if these well, let's just say that we know of several large funds that are putting on large positions and options, and they are complex options positions, and it may not just be across several strikes on your calls if you wanted to go up. They're also working the puts. They're also working different periods. They're also maybe even working different products too to get into that position. So all the large funds know they're well, maybe they don't know, but they understand that they have large market impact. So if they know that they're going to move the stock a lot, they're maybe not even going to play the option. But yeah, it's a whole different combination of stuff. But I really don't think it's tough to spot, and it takes a lot of time, and it's multi-day, it's multi-month. If they're even doing multi-months in options trades. Which I honestly highly doubt. If they're doing that, they might as well just play the outright. But there's a personal opinion there. There's more than enough options to spread the risk across and to not make everybody see, oh, boom, there's somebody here. But I have seen that like some people with insider information, they'll flash like 500 in the screen on HLF on like a weekly the day before some freaking news comes out.
We've seen that.
That's like a $1 million position. That's not like $100 million position on a weekly option. You don't really see that too much. So.
Right. And then also remember, guys, just to add on to what people are saying, is that when these big block trades go off, there's a hedge. The hedge is the other side of it. So they got to go into the stock and start hedging, or they got to go back in the market and start hedging, and that's going to also move price as well. It's going to move sentiment. It's going to move retail sentiment. So absolutely, there's market impact there. So next question is, do you limit in and out on tight spread stocks like Apple, or just go market? Dude, if I get a tight spread, baby, I'm in there.
Just go. Just take it. If it's tight spread, just take it.
Just take it. Yeah, don't mess around. Don't mess around in the middle unless you have unless you might have access to a dark pool or like a mid-market thing where half a penny really means something to you. But for most of us, just hit that. Just hit it.
Yeah, I mean, if the stock's moving fast, I would say that there are some people that are concerned about the spread widening really fast or some shit like that. But honestly, if you're a retail guy and you're not making markets or making the spread at all, just freaking go market. Take that offer.
Right. So now, check this out. Do you think you will be able to get ISO orders, the intermarket sweep orders, for your brokerage when you set it up? There's a lot of rumors going around about this, apparently, Pete.
Oh, yeah, we got ISOs.
We got ISOs, and we're working on it. We are working on it. Again, Peter and I can't say much about it right now, but as always, Sang Lucci is on the job, and we are working on it. Might take a little bit longer than you guys expect, but we are definitely working on it. Pete, you got any comments on that one?
ISOs are literally just the beginning of the
Yeah,
entire pyramid of orders that you can use here. Let's
right.
just say that there's a hierarchy of order types plus
Definitely,
dark pools and shit that you
definitely.
just add up over time and you'll get better and better fills. But it takes a lot of time, and for us, we're actually still relatively retail
Right.
to the whole entire space. We don't push around 250,000 contracts a day type of thing. So it's
Yep.
very, very tough to get into the know and into the arena where we can actually get these orders and have special treatment in terms of building an algo to execute orders. So yes, we are there. It's been really, really freaking tough. It's been pretty much my job to try to get this done, and
Yeah, yeah.
we're there.
A lot of this stuff is on the Asian persuasion over here. Have we
Yeah.
changed that nickname? We got to
You
change it.
came up with that because there was nothing else better to come up with. Yes.
All right, man. Pete, anything you want to add here before we close it out here? Some
I think
words
we're
of
good to
wisdom?
go. I'm looking forward to everybody posting P&Ls. Again, Ezra's in there, you're in
Yep.
there. Freaking everybody's up and trading. This has taken a really long time, but we are back in action
Back in
and
action,
just
man.
waiting for the haters to come out. Just waiting for the haters.
All right, everybody. Thanks for joining in. You can catch us next Thursday on the mailbag. We might have Peter back next week, but we'll see.
Awesome.
Take care, guys.
All right, have a good one, guys.